I'm sure you've heard the news. The stock market is a hot topic these days, and for good reason. It's a place where fortunes can be made and sometimes lost, but with the right knowledge and strategy, you can navigate it successfully. Investing in stocks can grow your wealth. Imagine being able to make your money work for you even while you sleep. That's the power of investing in the stock market. It's not just for the wealthy or the financial experts. It's something anyone can do with a bit of learning and patience. Let's break it down. Understanding the basics is the first step. The stock market might seem complex, but at its core, it's a marketplace where buyers and sellers come together to trade shares of companies. These shares represent ownership in the company, and their value can go up or down based on various factors. First things first, what are stocks? Stocks, also known as shares or equities, are essentially pieces of a company. When you own a stock, you own a part of that company, no matter how small. This ownership entitles you to a portion of the company's profits and assets. Think of stocks as tiny pieces of a company. Each piece or share represents a fraction of the company's total value. The more shares you own, the larger your stake in the company. This means you have a vested interest in the company's success. When you buy a stock, you're buying a piece of that company. This transaction happens in the stock market, where shares are bought and sold. The price of a stock is determined by supply and demand, and it can fluctuate based on a variety of factors, including the company's performance, economic conditions, and market sentiment. Cool, right? Owning a piece of a company can be exciting, especially when you see your investment grow. But it's important to remember that investing in stocks is not a get-rich-quick scheme. It requires patience, research, and a long-term perspective. Now, why invest in stocks? The primary reason is the potential for growth. Historically, stocks have provided higher returns compared to other types of investments, such as bonds or savings accounts. This means that over time, your money can grow significantly if you invest wisely. Over time, stocks can increase in value. This growth is driven by the company's performance and the overall health of the economy. When a company does well, its stock price tends to go up. And as a shareholder, you benefit from this increase in value. This means your money can grow without you lifting a finger. By investing in stocks, you can take advantage of the power of compounding, where your investment earnings generate even more earnings over time. This can lead to substantial growth in your wealth. But remember, stocks can go up and down, so it's important to be patient. The stock market is known for its volatility, and prices can fluctuate widely in the short term. However, over the long term, the market has historically trended upwards. This means that while there may be bumps along the way, staying invested can pay off in the long run. To get started, you'll need a brokerage account. A brokerage account is an account that allows you to buy and sell stocks. It's similar to a bank account, but instead of holding cash, it holds your investments. There are many online brokers that offer easy-to-use platforms for beginners. It's like a bank account, but for buying stocks. Setting up a brokerage account is usually straightforward. You'll need to provide some personal information, such as your name, address, and social security number, and then fund your account with money that you can use to buy stocks. There are lots of online brokers that make it super easy to sign up and start investing with just a few bucks. Many brokers offer low or no minimum deposit requirements, so you can start investing with a small amount of money. They also provide educational resources and tools to help you make informed investment decisions. And here's a tip: don't put all your eggs in one basket. Diversification is a key strategy in investing. By spreading your money across different stocks, you can reduce the risk of losing all your money if one stock performs poorly. Spread your money across different stocks to reduce risk. Diversification means investing in a variety of companies and industries so that the performance of one stock doesn't have a huge impact on your overall portfolio. This can help protect your investments from market volatility. That's called diversification. It's a fundamental principle of investing that can help you achieve more stable returns over time. By diversifying your portfolio, you can balance the potential for growth with the need to manage risk. So, there you have it. Investing in the stock market can be a powerful way to grow your wealth, but it's important to approach it with knowledge and caution. Start by understanding the basics. Open a brokerage account and diversify your investments. Your quick guide to getting started with stock market investing. Happy investing. Remember, the journey of investing is a marathon, not a sprint. Stay informed, be patient, and enjoy the process of watching your investments grow over time.